Hello and welcome to the Leverage Podcast. I'm your host, Paul Richard, and we have Dan Langenberg with us today. Special guest, welcome to the program. Dan, how are you doing?
I'm good, man. Thanks, Paul, for having me on.
Fantastic. Yes. We recently met at one of the networking meetings here in the Springfield area, and so I was super excited to showcase what you got going on. It's a very unique thing. I had never heard of it. And so I guess what I would say is open us up a little bit about who you are, how you got into this business, and give us a little background.
Yeah, absolutely. So, my name's Dan Langenberg, and what happened with me was I was living in the Branson area, and I owned a little farm out there, and I relocated jobs up in Springfield, but I was driving a lot to Springfield, and I told my wife, I go, you know what? Let's go live up in Springfield, and then we'll come back down to Branson on the weekends, So I was like, well, we gotta find some capital, right? And I had already spent my capital on my property in Branson. So then I said, well, what assets do I have? And I remembered that I had a whole life insurance policy that my parents had started for me with one sum in 1987 when I was 4 years old, with one sum of $5,000. Well, I don't know if people realize this, but whole life insurance policy builds equity. It builds basically a cash value that you use the word leverage, right? That's the name of the podcast. You're leveraging your cash value. And what I was going to do, though, I was going to surrender the policy. I was like, you know what? I'm not going to die anytime soon, honey. Let's just cash this thing in. The cash value was over $60,000. And I could buy a house on the north side of Springfield. Back then, you could buy a house for less than $100,000 because this was pre-2020. So, and so instead of surrendering the policy, the lady goes, do you want to do a policy loan? And I'm like, what are you talking about, a policy loan? And so I don't know if people realize this, but you can take policy loans and leverage against your cash value. And you don't have to fill out an application. You just request the loan. The money's in your bank within 1 to 3 days. And then the one of the best parts is like you pay it back on your timetable. Because all the collateral is there, right? They're on the hook for this big death benefit that's going to go out to your family one day when you pass away. So they just decrease their liabilities on that policy loan. So then what I did is I was able to pay, I bought the house. I paid my policy loan back within like 5 or 6 years. And now I'm buying my neighbor's property with, because when you can take out another policy loan, right? As soon as you put money back into your system, you take out it again, and you have even more money available because the whole time you're out using the money, the policy is still in force and it's growing. Because you're not actually borrowing from your money, you're borrowing the life insurance company's money. You're just using the policy as leverage, as collateral. So you're buying the life insurance company's money. And so then, I've done that a couple times now where I'm like a lender and I can lend people money. And so it's a real blessing. And now I'm getting an external return with that investment. And then my policy is growing at the same time. So it's just a neat way to do your finances.
That's awesome. Now, when you discovered this and first found out about it, what mechanism did you use? Do you have to go to the insurance company? Who actually provides the loan servicing at that point?
Yeah, you just go to the insurance company. They have it set up. So now they have like a portal, and a lot of these companies, so you can just go to the portal. You don't even have to deal with a human. One of my policies is with Northwestern Mutual, my old policy. So I usually just call them, and it's very quick, and the money is again, it's there in no time. And there's no questions asked. It's not like, why are you using this money? It's not, it's just as much as you want to borrow up to your cash value amount. And then the payback, it's not like, hey, you got to get this back. It's like, no, at the end of the day, you could just not pay it back and it could just come off of the death benefit. So it's like, it's already a system that's already capitalized, right? You're not borrowing from nothing like most people going to banks and then they're just paying all this interest to banks. So it's a whole nother way to think about your cash flows and your financial system.
Yeah, no kidding. All right. So is there an interest rate on it?
Yeah, yeah, there is an interest rate on it, and when you think about it, it makes sense because now you as a mutual policyholder, you're an owner of the company now. The policyholders are essentially the owners. So if you weren't paying an interest rate back to the company, you'd be kind of like, borrowing out the back door, but not replenishing the systems because every investment that the life insurance company makes that rolls back into your dividends, and the interest and dividends is building your policy, right? And so if they
Right.
weren't charging you an interest, then how are they making money from their investments to give back to their policyholders? So yeah, but it's a very competitive rate because the collateral is so good. The reason interest rates are high in the first place is because like a credit card is because there's no collateral. They don't know if this guy's going to be paying back, and so they're charging like 25% on a credit card, right? So usually, like right now, between 5 and 7% interest rates at these life insurance companies. So yeah.
Very good. And so there's no pressure to pay back. Do they put you on some type of a, payback period or anything like that, or do you just self-determine that?
You self-determine it. But so the guy who came up with this idea, who said, like, this is whole life insurance policies have been around for over 200 years, 250 years now. Like, it's one of the oldest things before the IRS was even created, right? All this stuff was around. But this guy, Nelson Nash, and I'll hold up his book, Becoming Your Own Banker. Here we go. Becoming Your Own Banker by Nelson Nash in the year 2000. He said, why aren't we flowing our money through these policies and then treating them like our storehouses, our banks, our warehouse for our wealth, and then just like finance stuff through our policies? And so that's kind of the idea, is to think about your cash flow and how much money you want to keep. You know what I mean? And then you can just have that money just continue to grow over here while you're borrowing from the life insurance company over there. So,
Very good. Well, some people may think this is complicated. It sounds like it really isn't. So, can you walk us through, like, step by step, how somebody would accomplish this? Do they go to their website? Does everybody have it? Does New York Life have it? Everybody else have it? Is it now common or uncommon to have that available as an option?
yeah, I mean, what's interesting is whole life insurance used to be like the staple of American finance. It's where people put their money, it's where they saved until the 80s when it all became buy term and invest the difference. There was really a stock market craze ever since the 80s, and there's been a big shift. But some of this shift now is changing back to the way things used to be. And now these mutual companies, you want to do, I recommend doing business with a mutual company, because a mutual company means you're a part owner of the company. You're a mutual holder now. That's why you're receiving dividends at the end of the year. So find a mutual company. Yeah, you can reach out to them, or you can find an agent. I went through the Nelson Nash Institute, so they actually have like licensed practitioners, which I've gone through their program to become one. And the practitioners program basically teaches you the whole methodology behind using whole life insurance policies for your personal banking system, and how to design policies to build cash value, especially in the early years, because people, they have need for finance throughout their life, right? They want to start using their policy in the first year, and you can do that. Traditionally, a whole life insurance policy, like your grandmother's policy, was like this thing that did not grow at all in the first couple of years, right? But you can especially design life insurance policies to grow cash value faster, especially in the early years. So, yeah,
Interesting.
anyone in good health, like they have to be in decent health to get a policy. They don't have to be in terror. Like, even if they're like have health problems, you can still get a whole life insurance policy. And if you can get one, you should, because it's a tier 1 asset. Like, it's a really good asset to have.
Okay, so if somebody, let's take the person that already has one of these, and maybe it's been somewhat laying dormant, like yours was, really. I mean, over the years, it was gaining cash value, as you said, and so was 60,000 the payout amount? Is that what it was?
Yeah, you could think of it like a surrender charge. Let's say you wanted to just
Okay.
fold it, right? They would give you that amount. It's
Yes.
like the amount that's growing, the equity that's growing in the policy. Now, the death benefit is like was over like a $250,000. So if I were to pass away,
Okay.
my family would receive a death benefit of $250,000, income tax free. This is all tax free stuff, by the way. It's growing tax free. You're borrowing against it tax free, and it's and then it goes out to your family tax free, income tax free, right? And so, yeah, that's kind of how that works.
Okay. So they would go if you mentioned the different type of institution. You said it's a mutual institution. Can you? What would be some of the mutual institutions that we might commonly know?
Well, okay, so Northwestern Mutual has been there basically since the Civil War. One America
Okay.
has been there since 1877. Lafayette Life, another great mutual company, has been there since 1905. And Paul, these companies have been giving dividends every year through the Great Depression, through the recessions. I mean, it's like these because they're making conservative investments. They're thinking long. These people are thinking long term, right? This is like a pool of money so that they can pool together so that the risk of someone dying, that they can help that family restore those people back to fullness, right? Compensate, so they're making long-term investments. You know what I mean? They're not like chasing a bunch of like quick returns. So it's the long game.
I see. If they're in a non-mutual company, does that block them from doing this, or is there still a way that they offer a mechanism to do it?
That's a good question. I'm not as familiar. I think they can still benefit by doing policy loans. I don't know if the dividends work the same because dividends would go more to the shareholders than the policy owners. Just like when you have stock, right? And they're concerned about their shareholders. Well, with a mutual company, the policy holders essentially are the shareholders, right? And so that's what. So as far as like how that works, I think they can still take policy loans. They would just need to call their company and figure out what they can do.
Okay. Yeah, okay. That makes sense. What about, okay, so now I'm the guy that doesn't have a life, whole life policy at this point, and I'm looking at this thing going, oh, this is pretty neat. I would love to, let's say, buy and flip homes. And so I just go out and get a $250,000 policy and then begin to loan off of that to invest in this type of endeavor? I mean, what's their risk? What's my risk? How are they assured that I'm going to continue to pay my monthly premiums and those types of things? How does that all work?
Well, again, this is just a contract between you and an insurance company, right? You promise to pay premium, and then they, promise to basically grow your policy and give you a death benefit when you when you pass away. But there is that equity component, this whole cash value, these living benefits where you can leverage in real time, right? So like his principle, Nelson Nash's principles are think long range, right? And then this number two is don't be afraid to capitalize. So if you're wanting to do real estate, then start thinking like, how can I start directing my cash flows through this system first and then go out and do what I'm doing, and making my investments, kind of like I did with my house, right? So while I was doing that with my house, well, my cash value was still growing as if I hadn't touched or done anything. It's still in force growing. And so then when I paid that back and now I want to borrow again, well, now I can borrow up to like actually more like closer to 90,000. Right. And so I actually made two different investments. I bought my neighbor's house and then invested in my previous business. And so I'm getting 9% back over here and 8% back over here. I have to pay the policy loan back, but I mean, that's not a big deal. So I'm in control. The
Very
point
good.
is like you're in control, right? And they're guarantees. And so that gives you a lot of peace of mind knowing that I have some economic financial guarantees that I can actually depend on, and that actually gives me more freedom to go out and take risks if I have some certainty in my finances already.
Understand. Yeah, this is amazing. I'm so glad we got a chance to start delving into this. So, in as regard to your business, is this something where now you're counseling people and coaching them on doing this, or what's your business now that you're relating to this?
That's what I love doing is I love counseling people. I love talking to them about how this works and how they can do it. And then I can help facilitate that by designing their policies. What do your cash flows look like? What are your goals? Okay, well, how can we make this work, right? Especially so that you don't necessarily have to go to outside lenders, right? What are your current cash flows that you can start flowing through a policy and start keeping all of that money that's going to turn into cash value and death benefit, right? And legacy. It's going to turn into legacy one day and you're going to pass it on to your family. I mean, wealthy families have done this for years. It's just like a lot of people don't know about it. Everyone's thinking buy term, invest the difference, 401k, it's this whole other world that people aren't used to. So it's a challenge to kind of re-educate people about this whole thing. I mean, I wouldn't have even known about it if I hadn't had a policy, and then then I went down the rabbit hole of learning about all of this stuff. It's so fascinating.
Yeah. Yeah, and then so you're a certified Nash coach, or is that what I heard you say?
Yeah, Nelson Nash practitioner. Yeah, there's a program. There's a program you can go through the Nelson Nash based in Alabama. Yeah.
Okay. Great. And then what? Do you have a website that we could direct people to?
Yeah, it's longmountainfamilybanking.com. Long Mountain is my last name in German is Langenberg. Berg is mountain. Langen is long, so I just went for Long Mountain Family Banking because I want to think about your family system, creating like a family, financial system, and then you can spread that. It doesn't have to be just one policy. Like Nash had over 40 policies because he's thinking about a system of policies. You can get one for your kids and your wife, and how do I keep expanding my system?
Absolutely. Wow, this is fascinating, Dan. And excuse me. So they go to your website. What kind of services do you offer to help people do this? Can you go a little more detail about that?
Well, my services, as far as consultation, is free. Like just schedule a meeting. Let's get to know each other. Let's start talking about your goals. What do you want to do with your finances? Currently, do you have debt? Do you need to get out of debt? Because again, this is a long-term plan. So, yeah, the best thing to do too is for me to direct these people to the book, because when they understand what this is, then it clicks, and then they say, oh, then they go from like thinking of a bare minimum, because people think, oh, I'm just life insurance. That's just like a product, right? And it's a protection play. And he's saying, no, this is a process. This is not just protection. This is about how I finance everything I buy in life. So it's much bigger. It's a different paradigm.
Definitely. Wow. I love this. And do you want to give a phone number of how they could contact you as well? Is that okay?
Yes, please. Call me, 417-251-3465. Call me, and I'd love to talk to you, help you out. You can go to my website and just book a time on my calendar. I use Calendly, like yourself, and it's
Yep.
great. And so, yeah, you can reach out to me both of those ways. Yeah.
Awesome. And what about an email address? What's a good email address for you?
Yep, longmountainfamilybanking@gmail.com. You can email me there.
Okay.
And we can start the conversation. Yeah, absolutely.
Fantastic. All right. Well, this has been a whole new endeavor for me, understanding how this whole thing works. So I appreciate that. I normally know what questions to ask. This has been a little bit tougher, because it's a different animal than I've been used to.
Yeah.
And so let me ask you this, Dan, if I left out anything that you'd like to share with the folks here on the podcast.
Well, I mean, there's so many things you can say about the infinite banking concept and becoming your own banker, but it's essentially just to preserve so much more wealth and to develop a system that you can capitalize and have it continue growing and accumulating your entire life. And the whole time you can still access money and finance all these different purchases that you're going to make. And especially to get away from the big banks and having to pay all this interest to banks. And a lot of people focus on the rates. Oh, it's a low rate, but they look at the volume of the interest over 10, 20, especially 30 years. It can sometimes be two and a half, three times of the actual amount of the actual thing that was there in the beginning. Like, like a $300,000 house can end up costing $750,000 when it comes to all the principal and interest payments that you're making. But if you can capitalize this through this system first and then start financing, you can get there. I mean, right? I mean, my parents got me there with one sum of $5,000 and that's all they put in. Right? So what if you kept on putting your capital through this system or your income through this system, even some of it? Think about how that would grow for your entire life that you can keep on borrowing against and leveraging. So
Yeah, absolutely. And as a grandparent, I'm thinking I need to look at this for my grandkids and their future and educate them on what they can do with it as it progresses, right? And so depending on where you are in your life, you can, hand it back to the next generation, et cetera, and work it that way. And, as a realtor, I'm thinking I have to ask that question when we're talking about financing. Do you have something like this available that you're not realizing you could tap into it and utilize that? Because couldn't that be used as a down payment, like you mentioned earlier, in a real estate transaction very easily?
Yeah, my original mentor, he that's how he got his. His dad had a policy on him, and on his wedding day, he hands him the policy and says, "Here, son, here's this policy, and so you can use this." And that's what he used for his down payment when he and his wife bought a house.
Wow. That's a nice gift.
Yeah,
all right. That is a very nice gift.
A nice gift, and it's also a teaching tool to teach your kids about finance.
Yes, that's great. Are you developing any curriculum to do any, webinars? And I think you said you have a podcast. Give us that name of that one as well, so we can find that on. Are you on Spotify and Apple, etc.?
Yeah, so I just have a YouTube channel, Long Mountain Family Banking, and so I have some interviews there, a podcast, and then again, the book Becoming Your Own Banker. Read it, and it's only 92 pages. It's a 2.5-hour read. I mean, it really will just at least consider the idea to know that it's out there.
Sure,
and it'll be really helpful. But yeah, that's mostly what I've got.
Awesome. Fantastic. Well, this has been very enlightening for me, I have to tell you. So I'm glad, networking is just a great way to make connections like you and I, just being in the room together and tapping into each other's resources and ideas that we never would have thought of on our own, right? That's the whole idea.
Yeah. And you mentioned those webinars, and that's something I'd really like to get into. You said that last week, and I was like, oh, yeah, that's really good. And I was actually researching it this morning, so I think I'd like to get more into that.
That's awesome. And this particular Riverside platform has a webinar component to it if you wanted to look into that as well. So,
sure.
And we'll take that. Well, listen, Dan, it has been a pleasure having you with us on the podcast today. Thanks again for taking time out of your schedule to be here. I know you're a busy guy, so thanks again. I appreciate it.
Yeah, absolutely. Thanks so much, Paul. Appreciate it.